Hello everyone, my name's Hooten and welcome to GenX Analytics. Today we're going to be going over sort of the market over the past week, not just crypto but the stock market as well. It's not had the best run, I suppose, the past week. You've got some rising tensions, some geopolitical events that sort of maybe causing the price to fluctuate a little bit more than what it usually does. So we're going to sort of go over that today, go over the price, go over some things that you might want to do after a bit of a market crash. And then some things to sort of prepare for any future ones should they happen. That's going to be the basis of the video, so sit back, relax, and enjoy. All right, so crypto often has these cycles where you'll see a big upside, coins doing multiple X's in value, and also your profits. But at the same time, you can also get some quick downsides, losing 10% a day plus on some occasions. I'd say it's quite a tough market to be a part of, especially when you compare it to something like the general stock market. You don't often see prices move as much as you do with crypto. It's just the volatility of crypto, unfortunately. And for any investor who hasn't seen the downside before of crypto, then this is something that might be quite shocking to actually see. And it could also be quite emotionally difficult for you to deal with as well. So this video is here to sort of help you with that. So we're going to start off with the first question as, why did the crash happen in the first place? And has the traditional stock market also fallen as much as what crypto has as well? We're going to head over and have a look at that just now. All right, so as you can see just on my monitor here, we currently have an increase since I'm recording. Nice 24-hour increase. Most of the cryptocurrencies are sort of reaching the 10%. Well, we'll say between 5 and 10%, with some doing exceptionally well, such as Terra or Luna. But over the 7 days previously, it's still not quite reached the area of what it once was, which is fair enough considering everything that's going on. But yeah, so you can see that this has increased, but it's still not quite there. And we're sort of going to go over a couple of things that might have caused something like this. As you can see, yeah, the last 7 days we're still down a little bit. And yesterday, if I would have recorded the video, we would have been down a hell of a lot more. So crypto itself doesn't look too bad. And then as we just head over to TradingView, which is an app that I've told you guys about before, and a lot of people use it. But we're on just looking at we'll have a look at the S&P 500 index, and you can see we're on the daily chart, so each candle represents a day. Yesterday, you can see it dipped quite far, and it's just started to increase again during the course of yesterday and today. But as you can see, sort of over the past month or so, basically from the start of this year, we've been in a bit of a downtrend. And when you look at the Nasdaq, it's very, very similar. So I don't think it's strictly due to the events that have been going on at the moment, but they certainly would have helped. So I was looking at this and I thought, okay, well, this is in a bit of a downtrend. You guys will know that crypto has been in a bit of a downtrend as well. So they're sort of following suit. Then when I looked at the commodity side of things, so crude oil, gold, that sort of stuff, as you can see, crude oil had quite a big spike yesterday. And if you also have a look at gold, that had an even bigger spike yesterday. But anyway, we'll go back to crude oil for now. From the start of this year, there's an uptrend, and there has been for quite a while. So not even just the start of the year. And it kind of makes sense in a way. For crude oil and gold, I'm just using as examples to sort of increase in value. I suppose they are less, speculative assets when you look at something like crypto. Crypto is still quite new. Some countries don't like it. The majority of countries don't seem to like it, and especially governments. So when it comes to this sort of thing where people are maybe a little bit worried about where things are going to go, we'll talk about Russia and Ukraine at the moment. I think with everything going off between Russia and Ukraine and sort of tensions rising with other countries as well, people are more fearful to be in the market, especially in speculative assets, just like crypto and even some tech stocks and growth stocks as well. So to see commodities rising, it makes sense because, commodities are like real things, the tangible, the things you can actually hold. So I can see why people would invest in gold and oil because it's things that are needed in the real world. So you would take things out of assets that are more risky, such as cryptocurrency, and you'd, put your money into either, just cash, stable coins if you want to still stay in crypto, or you would hold it in these sort of commodities instead. There was one other ticker I wanted to look at, and it was MOEX, which is the Moscow exchange. You can see that since the whole thing has kicked off between Russia and Ukraine, you can see how far this has actually dipped. It was already in a bit of a downtrend, we'll say, from September last year. And you can see that since everything has sort of kicked off, you can just see there's quite a big dip in price. $140 reached all the way down to 70. So that's a 50% drop, which you never really see in a stock market. So you can see that the events surrounding Russia and Ukraine are actually affecting some of Russia's stocks quite a lot. I think some other things that might have affected crypto as well, and just sort of the overall sentiment, especially we'll talk about Russia. I mean, Russia at the start of the year were basically saying that they were going to ban cryptocurrencies. They didn't like them, basically. So during the start of February, the Bank of Russia actually called for a ban on cryptocurrencies, and then not so long after, same month, they decided that they were no longer going to ban cryptocurrency and they were going to recognize it as an asset class instead. Quite a big change in sentiment from the government to all of a sudden just change their views and opinions on it. So I'd kind of say that it's still a bit uncertain, just because of the direction has just changed so quickly. So I wanted to just sort of talk about what you can do after a market crash has happened. Well, we're starting to see a bit more of a recovery now across all the markets. I do want to talk about just what you can do when it comes to future crashes, and also now still, because we're not still at the the highs that we were once at, and even just a couple of months ago, never mind in the last 7 days. One of the main things that you'll hear so many people say, and I'm going to say it as well, is to buy the dip. Buying the dip of crypto and other stocks can be the first step for you just sort of entering back into the market. And you could do this by using DCA, which is dollar cost averaging. You're basically spreading out we'll say $1,000 as an example. You'd be spreading out $1,000 over, say, 2 weeks. So you'd be investing a certain amount every single day. That's sort of the basis of what dollar cost averaging is. So if you had $1,000, you could spend the next few weeks just averaging your buys into crypto or any other stock. If the situation turns out to be worse in a week, like the prices dropped even further, you'd still be buying into that price. So you're sort of averaging your cost or your entry cost. As I said before, it's very common to see people actually buying the dip. Many investors always have a stack of cash sat on the side, just in case these events happen. If you see like a big drop of 10% in a day, there's a good chance that you're going to see a bounce. So buying the bottom and waiting for this relief bounce is a strategy that people often use. If you've seen my passive income video, I've explained how you can earn interest on some of the cash that you might have stacked aside. So you're not always losing out on gains, you're still earning passive income from the cash that's sat there. I would recommend that you always try to leave some cash on the side and never be all in a market, so that when crypto does dip, you can always buy just a little bit lower. Obviously, anything I'm saying for this video, it's not financial advice, entertainment purposes only. Another thing that you can do, we're sort of going to go more in depth on the stablecoin side when you have your cash sat aside. We're going to talk crypto for this, so it's about using your stablecoins. Rather than just having them sat in an account somewhere, there are ways that you can actually use it, and I'm going to go through that today. Now, you've seen me talk about KuCoin before. I think this might be the third video I've spoken about KuCoin. I'm not sponsored by them. It's just something I've used myself, so I'm just familiar with the platform. But basically, they have a lending section, and you can see that you can lend a number of different cryptocurrencies, but you can also lend stablecoins. So if you've got a stack of cash that's sat on the side not doing anything, you can actually lend your USDT out. You can set an amount that you want to lend. You can set the how long you want to lend it for, and then what daily interest rate you're going for. And then it will also tell you your estimated profits, and then any current lends that you've got going on, any open orders will be at the bottom. It's really simple to use. If you don't really know what to pick, or you don't have enough time to do it every single day, you can just click auto lend. What auto lend does is basically you type in your reserved amount. So the reserved amount is basically how much money you want to be free all the time. So say if I've got an account of 1,000 USDT, I want to reserve 200 USDT for my own use. It will then reserve anything over the 200 USDT. So as we use the example of 1,000, it would use 800 to lend out. So you'd be earning interest on the 800. So that's what the reserved amount is. The minimum day rate is your daily interest rate. You basically set your minimum amount. So for us, we could put 0.005. So we'd be earning that every single day or higher, depending on the actual USDT funding market. You would set all terms, and then all you have to do is just click OK, and it would start the process of lending out your money. Really simple. It will tell you about any settled balances, any unsettled balances, and your order history. So you can see there's plenty of information there. As I mentioned before, there are many other exchanges and also the DeFi side that will do all this for you. I'm just using KuCoin as an example so I can actually show you how to do it. I've not used other platforms before, so that is my reasoning for it. I promise I'm not sponsored by them, and I would say if I was. So I would say that a couple of things to sort of take away from the market crash is just to look at some of the stocks that might have done well, or commodities that might have done well, and then in the future it might be worth just investing a little bit into those so that you can sort of limit your losses a little bit. So for example, gold and oil on this occasion has done quite well, so it'd be worth just having, you know, a little bit maybe stored in them. Not financial advice, of course. Just sort of pointing things out. And then there is, of course, just buying the dips, making sure that you have some USDT or something like that just stacked on the side so you can use it for these dips in the future. The same would go for actually using that stack while you're not using it, if that makes sense. You know, actually just putting those stable coins to work before you actually need them. Let's talk about just how the market's doing now. So yesterday was quite bad. Today's looking better, a bit more of a recovery across the whole board. So you can see, I wanted to have a look at the total value locked first. You can see that as we scroll down, over the past 7 days, the change in total value locked is mostly negative, but there are a couple of chains that have done exceptionally well, such as Terra and Phantom. I did a little bit of a look into Terra just to see what you know, the reason for people locking more value into this. And I saw that at the Anchor dominance, the Anchor protocol dominance of the entire ecosystem was 53%, which is quite high. So then I did a bit of a dive into Anchor itself, and you can see that over the past couple of weeks, the actual total value locked into this platform has risen from about $8 billion to $10 billion, which is quite a big increase. So then I decided to enter the website just to have a look to see what you can actually do on the website. And I've seen something that's quite good, actually. If you do have stable coins, then another way of earning some passive income on it is to just have a look at this website on Anchor. You can see that if you deposit UST, which is a stable coin, onto the Anchor protocol, you can earn 19.48% APY, which is huge for a stable coin. If you'd watched the video about passive income and I was looking at you know, PancakeSwap and some and Binance and things like that to earn interest on stable coins, it was a lot lower than this one. So I think that is the reason why there's been so much more total value locked on this particular chain, because people will have seen that you can earn 19% on a stable coin, and it's something that you don't really see. So I'd say that people are still a little bit more fearful in terms of the sentiment. As you can see, the total value locked is still going up on here, so there's more people that are still out of crypto despite the rise today. And this is the heat map for crypto in the last 24 hours. You can see that everything looks fine and dandy. I think the dark green means that it's more than 5% increase in the last 24 hours. So you can see that the majority of them have risen quite nicely today. If I'd have looked at this heat map yesterday, it wouldn't have looked good, I'm sure. And with a lot of cryptocurrencies down. Yeah, today's looking a lot nicer for sure. I'd say all in all, it's quite hard to see these steep declines coming in any stock market. It's always a reminder for me to actually just take some profits every time I'm making trades. So I just have some money set aside. I mean, that's the big thing to sort of mention that I am mentioning all the time for this video, is just to have something sat aside. I suppose one thing to take away from the stock market being down and the crypto market being down is just to make sure that I've always got something set aside. And when I am actively trading, any profits that I do make, I should sort of take a percentage and just leave it to one side. Don't invest it in anything else, just keep it in, you know, a stable coin, just so that if, you know, for the future crashes when they do happen, I'll have some money to actually purchase some of these cryptocurrencies lower. And now I've also found out that I could just put it into UST. Don't know how long it's going to last for, but I could put it in there and start earning 20% interest on that, which is nice. It just feels a little bit weird for me to have stable coins put aside. It's not something I tended to really do. Any trades that I did make, I'd just reinvest it into something else straight away. You know, I wanted to be fully invested in crypto, but it also meant I would get wrecked when it came to any crashes like today. Or yesterday, sorry. But at the end of the day, it's all about risk tolerance, and, you know, I was being way too risky. So now, you know, knowing that I can take profits, leave some to one side, and then carry on building a stack anyway, and then start earning interest using my passive income strategies, there's no reason not to. Hopefully, this video will sort of give you a little bit of comfort. A lot of people will have had similar thoughts to you. You know, things are starting to go down. You've got geopolitical events that might be causing it, chaos, but things are starting to rise again. In the short term, we'll see how things sort of pan out in the long term. I think a lot of you know, the reason for the price movement is just down to the whole ordeal with Russia and Ukraine. So we'll have to see how that pans out over the next couple of weeks. Just make sure that you take those extra steps when you are trading, just to make sure that you are taking some profits and leaving them aside for dips when they do happen. If you're in it for the long term, then it's okay. You know, things will eventually rise again. But yeah, I mean, at the end of the day, you will feel better when it comes to times like this, in terms of financially, when the market does dip and you have money to think, okay, I can buy now at a 10% discount. It's just getting to that stage. You know, if you don't have any money to do that, you're going to feel a lot worse. I hope you enjoyed the video. I know it's not the nicest topic in the world, but we need to speak about it. I need to give you some ideas on how you can prepare for this sort of stuff in the future. It sort of ties alongside my other videos that I've done recently as well, just about you know, the passive income strategies and the crypto basics. It all kind of ties in together, so make sure you watch them, of course. With all that being said, if you enjoyed the video, then please leave a like, subscribe, comment. What are your strategies when it comes to this sort of crypto downturn or stock market downturn? And what do you tend to do with the funds that you already have? Let me know in the comments. I'd be interested to know. Hope you enjoyed the video, and I will see you soon.